I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name's Cody Bills. Today is Friday for the weekly wrap-up. It is, of course, May 1st. Let's turn over to the grain hedge trading platform. See where we closed off the day. Corn trading down 3 1/4 cents. Soybeans down 11 1/2 cents. Wheat in Chicago down 1/4 penny. Kansas City wheat trading up 1 1/4 cents. And Minneapolis wheat here down 3 1/4 cents. One thing that we want to talk a little bit about today is, of course, the U.S. dollar. Now, for a long while, we've been talking about dollar strength, and how that impacts here corn, soybeans, and wheat on the global market. But this week, we had a different scenario. You know, we've seen strength out of the dollar for so long. This week, we finally saw a break here. And really, one of the reasons why we broke lower is the GDP numbers that came out. We saw 0.2% GDP annually in the first quarter. That is down from 2.2% in the fourth quarter of last year. What that means is that the Federal Reserve is unlikely to make a move in the near term to raise interest rates. So it seems as though when you take that risk off the table, you see the dollar deflate a little bit relative to other currencies, and that's one of the reasons why we're down here trading around that 100-day moving average. All in all, that typically helps grains, but it just didn't seem to be able to provide enough support for the grains this week. It is Friday. Let's talk a little bit about basis. One thing you'll notice when you look at the weekly change here in the corn basis between 430 and 423, you'll notice that corn basis was up on average about a penny this week. We did see increases out of the Gulf by 2 cents. The river market, particularly the Ohio River, was up 3 cents here on the week. So this was a nice little increase. We noticed this both for corn and for soybeans. So the Gulf was stronger, river was stronger. Ethanol on average up only a penny across the U.S. Let's take a look at soybeans here. You'll notice soybeans, another situation where the river market showed strength. The Gulf was up 5 cents on the week. We saw the river market up 3 cents. Barge rates declined this week. What that means is that when you have a decline in barge rates, which was down 4 cents, you do get a nice little increase here in basis, and that's something that's been helping out these river markets over the last week. Crush facilities on average across the U.S. mostly unchanged here. And so that right there is the basis environment. If you do have grain, old crop grain out there, it seems as though the basis regions that are moving along the river here. Now let's talk a little bit about the daily charts and the damage done this week. One thing you'll notice when you look at the July corn chart, you'll notice we are looking at the July corn chart, no longer the May. You'll see that we came down. We were down around that support line when you draw the trend on the low side of this downtrend. Well, today we kind of retested that. We didn't close out near the lows of the day, kind of closed out right in the middle of the range. It's going to be interesting to see if we see continued pressure here on the corn market. I think one of the reasons why we saw corn, soybeans, wheat, for the most part moving lower here is just a continuation of the trend. It's really hard to explain it other than that. We did get the Rosario Grain Exchange coming out yesterday, increasing their corn, increasing their soybean forecast. Their soybean forecast increased to 60 million metric tons, up from 58.5 million metric tons in their previous forecast. So it seems as though these analyst forecasts are coming out. The South American crop is continuing to grow in terms of expectations, and that puts pressure on the market here. Let's take a look at soybeans. Now this is the one that was kind of interesting because we had great export sales yesterday, but yesterday we were unable to hang on to price gains. Today we continued that drop, and really I think it has a lot to do, like I talked about corn, it's just a continuation of a trend. We've known that this trend has been going on and carrying on really since the end of, or since February, since January even, we've been in this downtrend, and it's something that is likely to hold. You see, we get up near the high side. We drew a trend line here between the bodies back in January and then again the highs in February. If you draw a trend line on those bodies, you'll notice that yesterday's trade action, we got right up there, bumped on some resistance, and started selling off. I think one thing that is a bit of a concern is, of course, the bird flu situation. This affects corn, this affects soybeans. There is concern that this bird flu could be more contagious than originally thought, that it could be more widespread than originally thought. There was 4 more instances where we saw bird flu throughout Iowa here on Thursday. One of those instances was a boiler breeding facility, and the concern there is that typically these facilities have better biosecurity, a little bit safer when you look at expectations for getting or spreading the bird flu. But bottom line here, that causes concern, and that causes concern for all feed grains, something that we want to pay attention to. Right now there is no material impact here on feed use, but it definitely could have a longer-term impact on feed use, and we want to pay close attention to how that story develops. Let's take one last look at wheat here, and we'll close off today's show. You'll notice wheat came up, touched on this resistance level that was support. It was around 485, and now it seems as though we're kind of turning back over and continuing this trend lower. It's going to be interesting to see if we continue to see selling here in tomorrow's or in Monday's trade session. One thing you'll notice is that the plains area, which had been dry for really the first part of this growing season when we were coming out of dormancy and starting emergence, it was so dry down there. Well, we finally got some rain over the last 2-3 weeks, and it looks as though we're going to have some more rain here in the 6 to 11 day forecast. That's going to be very positive for the wheat crop, but that will most likely weigh on prices here going forward. Thanks a lot for tuning in. That's today's show. If you have any questions about what we talked about today, give us a call. Number is 877-472-4607. And if you haven't done so already, go ahead and take a demo, a 14-day free trial. Just go to grainhedge.com. You'll get live quotes in the cab of your planter. It's definitely one of those things that is very beneficial for producers out there that are looking to price grain and waiting for those opportunities. If you're waiting for opportunities, it's great to have live quotes and be able to capture them when the market provides those opportunities. Thanks a lot. We'll see you here on Monday.